Imagine getting a call from the bank telling you a loan payment was missed. Your credit score just dropped, and collections may be coming after you. Except the loan was never even for you. You never bought the car. You never used the credit card, and you never spent a single dollar. Your only mistake was trying to help someone you trusted. Every year, millions of people co-sign loans for friends, family members, partners, or even co-workers, believing it's just a small favor, a simple signature, or temporary support. But what most people don't realize is that the moment you cosign, you are no longer just helping someone. You are legally attaching your financial future to their behavior. Their missed payments become your missed payments. Their debt becomes your debt. Their financial mistakes can destroy years of hard work you spent building your credit score. And the worst part is that many cosigners don't realize the danger until it's already too late. Relationships get ruined, stress levels explode, debt collectors start calling, and suddenly, the person who only wanted to help is trapped in a financial nightmare they can't escape from. Banks and lenders understand something most people ignore. If the borrower could fully qualify a loan, they wouldn't need a cosigner in the first place. That signature is not just paperwork, it's the lender's safety net. And unfortunately, many people sign without understanding the full consequences because emotions take over logic. Maybe it's your child asking for help with a student loan, your best friend needing a car to get to work, your partner trying to rent an apartment, or a family member promising they'll never miss a payment. In the moment, saying no can feel cruel or selfish. People don't want to disappoint loved ones, they don't want to look heartless. So they sign, believing trust alone will protect them. But trust does not protect your credit score. Trust does not stop late payments. And trust definitely does not stop lenders from coming after you when things go wrong. The truth is that cosigning can quietly damage your financial life even if the borrower never misses a payment. The debt immediately appears on your credit report. It can increase your debt-to-income ratio, lower your borrowing power, and make it harder for you to qualify for your own loans, mortgages, or credit cards. One missed payment can drop your score dramatically and stay on your report for years. Imagine working hard to build excellent credit only to lose it because someone else became careless, irresponsible, or financially overwhelmed. And once problems begin, escaping the cosigner trap is incredibly difficult. Most lenders do not simply remove cosigners because you changed your mind. You remain responsible until the debt is fully paid off, refinanced, or legally released. In many cases, people spend years dealing with stress, arguments, financial damage, and regret over one emotional decision made in a few minutes. In this video, we're going to break down the hidden dangers of cosigning, how it secretly destroys credit scores, the emotional and financial consequences nobody talks about, real-life situations that turned into disasters, warning signs you should never ignore, and most importantly, how to protect yourself and escape the cosigner trap before it ruins your financial future. Because sometimes the most expensive word in personal finance is one simple word: yes. Most people don't become cosigners because they're financially reckless. They become cosigners because they care about someone. A parent wants to help their child go to college. A husband wants to help his wife get a car. A friend wants to help another friend rent an apartment. The decision usually starts with emotion, trust, and good intentions. The borrower often says things like, "I just need your name or I'll handle everything myself." And because there's a personal relationship involved, people assume the risk is small. But that emotional pressure is exactly what creates the trap. Nobody wants to look selfish or unsupported. Saying no to someone you love can feel uncomfortable, especially when they seem desperate. But lenders see the situation differently. Banks already know the borrower is risky, which is why they need a cosigner in the first place. That's the part many people ignore. If the borrower had strong income, good credit, and stable finances, the lender would approve them a loan. Your signature becomes insurance for the bank. The moment you sign those papers, you're not just helping someone anymore. You are accepting legal responsibility for a debt that can follow you for years. Many people believe cosigning simply means supporting someone's application. But legally it means much more than that. When you cosign a loan, you become equally responsible for the debt. That means if the borrower misses payments, the lender can immediately come after you without warning. They don't have to wait for the borrower to fail completely. The debt also appears on your credit report as if it were your own loan. This can increase your debt-to-income ratio and reduce your ability to qualify for future credit. Imagine trying to buy your own house while already being tied to someone else's car loan or student loan. Even if the borrower always pays on time, lenders may still see you as carrying extra debt. Now imagine what happens if payments start getting missed. Your credit score suffers alongside theirs. Collection calls can come to your phone. Late fees and penalties can affect your finances too. Some people think they can simply remove themselves later, but many lenders make that process extremely difficult. In some cases, the only way out is paying off the loan completely or refinancing it. Cosigning is not symbolic support. It is a legally binding financial commitment with very real consequences. Your credit score is one of the most important numbers in your financial life. It affects your ability to get approved for loans, credit cards, apartments, and even better interest rates. But cosigning can damage that score faster than most people realize. Payment history makes up a huge portion of your credit score, so even one missed payment can cause major damage. If the borrower pays late, that late payment appears on your credit report too. Suddenly, your years of responsible financial behavior are overshadowed by someone else's mistake. Credit utilization can also become a problem if you cosign on credit cards or revolving accounts. High balances increase risk in the eyes of lenders and can lower your score quickly. Even the initial loan application creates a hard inquiry, which may slightly reduce your score. But the real danger comes when financial problems spiral out of control. Imagine cosigning for a friend's car loan. They lose their job, fall behind on payments, and eventually the car gets repossessed. Now, collections appear on both credit reports, and your score drops dramatically. The lender does not care who drove the car. From their perspective, both signatures are equally responsible for the debt and the damage. The financial damage of cosigning is serious, but the emotional damage can be even worse. Money problems have destroyed countless friendships, relationships, and family bonds. At first, everything feels fine because the borrower promises they'll stay responsible. But once payments become difficult, tension begins to grow. Maybe you start checking your credit report constantly because you're nervous. Maybe you begin worrying every month about whether the payment was made on time. Conversations that used to feel comfortable suddenly become stressful and awkward. You may feel guilty asking someone about money, even though your financial future is connected to their behavior. Resentment slowly builds because you feel trapped in a situation you can't easily escape. Some cosigners become anxious every time their phone rings, afraid it could be the lender calling. Others avoid discussing finances entirely because they don't want arguments. In many cases, borrowers become defensive or embarrassed, which creates even more tension. The emotional pressure can affect sleep, mental health, and relationships with other family members. What started as an act of kindness can eventually turn into anger, regret, and distrust. The hardest part is realizing that trying to help someone may have permanently damaged the relationship you are trying to protect. Real-life cosigner stories show just how quickly good intentions can become financial disasters. Imagine a parent who cosigns a student loan for their child because they believe education will create a better future. At first, everything goes smoothly. Then graduation happens, job opportunities are limited, and payments become difficult. The child misses several payments. Collections begin, and suddenly, the parents' retirement plans are affected by debt they never expected to carry. Another common situation involves car loans. A friend promises they only need help qualifying for a vehicle so they can commute to work. Months later, the borrower loses income, stops paying, and the car gets repossessed. Now both people have damaged credit scores, collection accounts, and legal stress. There are also apartment lease situations where one person leaves unexpectedly, stops contributing rent, and the cosigner becomes responsible for thousands of dollars owed to landlords or collection agencies. These stories happen every day because life changes unexpectedly. Jobs disappear, emergencies happen, relationships end, and financial pressure increases. Most borrowers never plan to fail, but intentions don't protect cosigners from consequences. Once financial hardship begins, the lender only cares about recovering the money, no matter who originally used it. There are warning signs that should immediately make you think twice before cosigning for anyone. One major red flag is a history of missed payments or bad financial habits. If someone already struggles to manage money, adding more debt usually makes the problem worse. Another warning sign is unstable income. If the borrower changes jobs constantly, has no emergency savings, or already lives paycheck to paycheck, there's a higher chance payments could eventually become your responsibility. Emotional pressure is another dangerous sign. If someone says things like, If you really cared about me, ye would help. They may be manipulating your emotions instead of solving the actual financial problem. You should also be cautious if the borrower avoids discussing details about the loan, interest rates, or monthly payments. Transparency matters when your credit is involved. Some people promise the arrangement is temporary, but temporary debt often becomes long-term debt. Lenders are experts at measuring financial risk, and if they require a cosigner, that means they already see potential danger. Many people ignore these warning signs because they trust the borrower emotionally, but financial responsibility requires more than trust. It requires stability, honesty, discipline, and the ability to handle debt consistently over time. Escaping the cosigner trap is difficult, but it is possible in certain situations. One option is refinancing the loan entirely in the borrower's name once their credit improves or income increases. This removes your legal responsibility because the original loan gets replaced. Another possibility is requesting a cosigner release directly from the lender. Some loans allow this after a certain number of on-time payments, but approval is never guaranteed. That's why it's important to understand the terms before signing anything. Monitoring your credit reports regularly is also essential. The earlier you catch missed payments, the faster you can respond before major damage happens. Communication matters too. Ignoring problems only allows them to grow larger. If payments start falling behind, you may need to discuss solutions immediately, including payment plans or selling financed assets like cars. In extreme cases, some cosigners choose to help pay off debt themselves, simply to protect their credit scores from further damage. It may feel unfair, but preserving your financial future can sometimes require difficult decisions. The biggest lesson is that escaping the trap often takes time, patience, and financial sacrifice. That's why understanding the risks before cosigning is far easier than trying to fix the damage afterward. The good news is that you can still help people financially without risking your own future as a cosigner. One safer option is giving a smaller amount of money directly, if you can afford it, instead of tying yourself to years of debt. Another alternative is helping someone build credit responsibly through secured credit cards or credit builder loans. These tools allow borrowers to improve their credit history without putting another person's score at risk. Becoming an authorized user on a credit card can also help someone establish credit while still allowing the primary account holder to maintain control. Teaching financial literacy is another powerful way to help. Many people struggle financially because nobody taught them budgeting, saving, or responsible borrowing habits. Sometimes guidance is more valuable than a signature. Encouraging someone to improve their income, reduce expenses, or wait until they qualify independently may actually protect both of you from future problems. Real financial support should create stability, not dependency. Cosigning often feels like the fastest solution, but quick solutions can create long-term consequences. Protecting your own credit score is not selfish. Your financial future affects your ability to buy a home, support your family, handle emergencies, and create opportunities later in life. Helping others should never require sacrificing your own financial security. At the end of the day, cosigning is not just about helping someone get approved for a loan. It's about putting your own financial future on the line for a decision you may not fully control. One signature can affect your credit score, your ability to buy a home, your stress levels, your relationships, and even your peace of mind for years. And the scary part is that most cosigner disasters don't begin with bad intentions. They begin with trust. They begin with love, friendship, loyalty, and the belief that everything will work out. But life changes fast. People lose jobs, emergencies happen, relationships fall apart, and financial pressure can turn responsible people into desperate people overnight. The lender will never care about the excuses, the promises, or the relationship behind the loan. They only care about getting paid. And if the borrower can't pay, they will come after you without hesitation. Before you ever cosign for anyone, ask yourself one powerful question. If this entire debt became mine tomorrow, could I handle it emotionally and financially? Because that is the real risk nobody talks about. Protecting your credit does not make you selfish. Protecting your financial future does not make you a bad friend, bad parent, or bad partner. Sometimes the smartest financial decision is the hardest word to say, no. And sometimes saying no today can save you from years of stress, debt, damaged credit, and regret tomorrow. If this video opened your eyes to the hidden dangers of cosigning, make sure to like this video, subscribe to the channel, and turn on notifications because we are exposing the financial mistakes that quietly destroy people's credit and money every single day. And if you've ever experienced the cosigner nightmare yourself, Share your story in the comments, because your experience might help someone else avoid making the same costly mistake.